Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing jargon of Wall Street so you don't have to. And today we're diving into some real estate dealings that are a bit like a landlord saying, hey, can you stay after your lease is up but pay a little less rent? Oh, and before we dive in, if you love getting these unfiltered looks at company filings, make sure you're subscribed. We also have a Discord community linked in the description below where we break down these reports even further. Alright, so Generation Income Properties Inc. has dropped a bombshell, a Form 8K, which is basically a notification to the public about a big event happening within the company. Now, Generation Income Properties, or GIP as they are known, is a real estate investment trust. They own properties and collect rent. The exciting stuff in this report all hinges around two main events happening in August 2025. First up is a lease amendment. This is like a landlord and tenant agreeing to change the terms of their lease. Let's talk about the property at 585 24 Ornhaft Road in Grand Junction, Colorado. This lease was originally set to renew in April 2027. The tenant, Best Buy Stores LP, decided to use their renewal option early. And here's the twist, instead of the rent going up to what was originally planned, which was about $388,000 annually, they agreed to a new annual rent of $376,000. So the rent is actually going down from what they were supposed to pay for the renewal. This makes sense though, because the current rent is $353,000 and the new rent is $373,000 and the new rent is $376,000. So it's an increase from today, but a decrease from the originally planned renewal rent. This is a bit of a mixed bag for GIP. The good news is they secured a tenant for another term early, but the rent going down from the original plan might mean they're willing to make concessions to keep good tenants in place, especially in potentially challenging market conditions. Now for the other big news, on August 18th, GIP got word that a deal for another property, the one at 34W76th Street in Chicago, is off. This property was supposed to be sold to a company called 919 Investments LLC under a purchase and sale agreement dated July 9th, but 919 Investments LLC terminated that agreement. So this potential sale is now off the table. The company announced both of these events in a press release on August 20th. It's important to note here that this information, if not formally incorporated into another filing, isn't considered officially filed with the SEC for liability purposes. It's more of a public announcement to keep everyone informed. The press release is attached as an exhibit to this report, so you can read it yourself if you want all the details. Looking at the company's stock, they trade on the Nasdaq Stock Market LLC under the ticker GIPR, and their warrants trade under GIPRW. This tells us they're a public company and accessible to investors. Interestingly, Generation Income Properties is identified as an emerging growth company. This means they qualify for certain relaxed regulatory requirements under the law. However, they have not elected to extend the transition period for new accounting standards, so be keeping up with those faster than some other companies might. So let's put this all together. What's the story here? It seems Generation Income Properties is actively managing its portfolio through lease renewals and property sales. The early renewal on the Best Buy lease with a slightly adjusted rent shows they are perhaps willing to negotiate as much as originally planned. It secures income and avoids a vacancy as income and avoids a vacancy. The termination of the Chicago property sale means GIP still owns that asset and will need to find another buyer or reevaluate its strategy for that property. It's a setback, but not necessarily a disaster. It just means they'll have to work harder to move that asset or find a new tenant if it's vacant. From a high level, David Sobelman, the president and CEO, signed off on this report. As is standard, GIP includes a disclaimer about forward-looking statements. These are essentially warnings that future results might differ from what they predict due to various risks they mention, risks detailed in their prior SEC filings like their 2024 annual report. The key takeaway is if things change or new information comes out, they are not obligated to update these statements unless the law forces them to. Now, for my take on Generation Income Properties based on this filing, we see a company that's trying to navigate the real estate market by making practical adjustments. The Best Buy lease amendment shows flexibility in retaining tenants, even if it means slightly less aggressive rent increases. The termination of the Chicago sale is a sign that deal-making in real estate can be unpredictable. GIP's strength lays in its active management of its property portfolio and its willingness to adapt. Its weakness could be the potential pressure on rent increases if they're already offering concessions and the uncertainty around the Chicago portfolio and its willingness to adapt. Its weakness could be the potential pressure on rent increases if they're already offering concessions and the uncertainty around the Chicago portfolio and its willingness to adapt. Its weakness could be the potential pressure on rent increases if they're already offering concessions and the uncertainty around the Chicago property sale represents a risk to potential cash flow generation from that asset. A notable opportunity could be if they can successfully sell the Chicago property to a new buyer at a favorable price or find a strong new tenant if the current one leaves. In conclusion, Generation Income Properties is a real estate company in motion, adjusting leases, selling properties and managing potential setbacks. It's a dynamic business, so we'll have to keep an eye on how they handle the Chicago asset and if they can achieve more favorable lease terms in the future. Alright, that's our breakdown of Generation Income Properties' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.